I'm going to try and adopt the 12 unseen investment habits of highly disciplined investors to see if it actually makes a difference in my portfolio. Highly disciplined investors operate on a whole different level than the average person. They have a unique mindset and set of practices that contribute to their consistent success. Today, we're going to unveil these unseen habits that set them apart. Investing can be tough, especially when emotions come into play. It's easy to make impulsive decisions based on short-term market fluctuations or get caught up in the noise of financial news. But highly disciplined investors have learned to navigate these challenges with ease. They've developed habits that help them stay focused on their long-term goals. Emotional decision-making is a major pitfall for many investors, leading to buying high and selling low. Short-term thinking can also be detrimental, causing investors to miss out on long-term growth opportunities. Getting swayed by market noise is another common challenge, leading to impulsive decisions that often harm investment portfolios. Let's dive into these 12 unseen investment habits. First, highly disciplined investors set clear, long-term goals and create a plan to achieve them. For example, they might set a goal to save for retirement and create a diversified portfolio to get there. Second, they prioritize education and continuously learn about investing and personal finance. This might involve reading books, attending seminars, or following reputable financial experts. Third, they avoid emotional decision-making by using a systematic approach to investing. This could involve using dollar-cost averaging or setting stop-loss orders. Fourth, they focus on the process, not just the outcome. One of the most impactful habits among these 12 is the ability to be contrarian. This means going against the crowd and making investment decisions that others might not understand. For instance, during the 2008 financial crisis, many investors were selling their stocks in a panic. But highly disciplined investors were buying, knowing that the market would eventually recover. Mastering this habit can be a game changer for any investor, as it allows them to capitalize on opportunities that others might miss. The key takeaway here is that discipline and a unique set of habits are more crucial than raw intelligence in long-term investing success. These habits are learnable and actionable for anyone. By adopting them, you can set yourself up for long-term financial success. So, I want to encourage you to pick one or two of these habits to implement starting today. Share which habit resonated most with you in the comments below. Also, consider subscribing for more insights into building wealth and financial discipline.